Hey guys, welcome back to the channel. This is Future Trading with Mike, and today is June the 4th. This is a non-trading day. This is not a live recorded session video. More so kind of a question and answer type video where I want to kind of explain some key things. Okay, one of the biggest things one of the questions I get is more so, how do I minimize my loss? So how do I manage my loss? People, who are trading, we all suffer this. We be up a few trades, be in the green, and then all of a sudden we take a major or take a loss. Sometimes it could be major, sometimes it could be minor. But regardless of the fact is, it's all about managing, knowing how to manage that loss. And there are a couple of things that I guess rules, I would say more so, or techniques that you can use, or ways to help minimize your loss. It is frustrating because we all suffer this. All traders go through this, and there's no such thing of not having a losing trade. Now you guys know that I always say you should be green every day and not red, right? Maybe I should. Well, anyways, you should be green every day and maybe not red is what I'm trying to say. So you should not to say you won't have a loss, but it's all about minimizing your loss. And most of you guys know how to do that. And I got a recent question from a subscriber, from a loyal member here on the channel, asking, basically stating that they have trading 80%, trading be up 80%, trading 80%, which is good, and which means they're profiting. And then all of a sudden they take a bad trade, and then it could be a major loss where it wipes out all their earnings, profiting for the day, whatever the case is. The simple answer there is really being able to manage your stop loss, knowing really what to put it at, and not over trading. Over trading, knowing where to put your stop loss, and pretty much understanding market structure in a sense, and being patient. So if I was to really kind of classify and tell you three good techniques or rules to help minimize your loss to where you can remain in profit when you're trading each day, that would be, I'd say, one, your stop loss. Knowing your stop loss is, knowing to place your stop loss, because stop loss is everything in a sense. Some people trade with a hard stop, and some people trade with a middle stop. Me, my finger is always on the trigger closing the trade. So a lot of you guys see where I don't place a stop loss, whatever the case is, but that doesn't mean I have my finger on the close button immediately if price closes below a certain area. So it's about where to put your stop loss, and where your mental stop loss, and just knowing where to exit out of a trade the moment that you get into a trade. Oh, before that, let me say this. Let me stress this. Before you enter a trade, you must know, is it a good trade setup or valid area to take a trade from? Two, you must know where to place your stop loss, or where to get out at, by simply clicking the close button quick enough. And you must know where your profit target is. So two things. You must know where your TP is at, and you must know where your where your I guess I should say, where you need to get out of it, basically, and once that trade starts coming back against you, because you do not want to incur any kind of drawdown, right? So that's the key. The thing is that having a stop loss, a hard stop loss, you may, take a short loss, but nothing that you shouldn't be able to make back up. So the key is really stop loss, stop loss, stop loss. But you must know before you get in that trade, is that trade area a high probability area to take a trade from, one that is going to provide you with enough room to profit from. If you're taking a small margin of a trade, meaning you get into a trade, so yes, it could be a demand or supply area, whatever the case is, but you do not have enough room, meaning that you might have support or resistance, might have support right below or resistance right above, then don't take that trade, because it's going to be risky. Just for scalping, for maybe, especially for new beginners, for 3, 4 ticks, 5 ticks, whatever the case is, be very careful about those type of trades, because the thing is, you see me take them because I've been doing this for 10 years now. And the thing about it is, the more you spend time in trading, the better you get at doing things. The quicker, you guys hear me a lot of times in the videos, click, 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 click. I get questions about that all the time. How do you end the market so quick? How do you exit so quick? You just have to be very quick with your mouse, pretty much. and knowing where to get in and where to get out at real quick. And that's why I always pinpoint areas, before or once I get into a trade, price is going to go here. Price doesn't need, I don't want price to come back here because I know before I get into that trade where I need price to go and where I do not want to see it come back to. So that just comes from years of experience, understanding market structure and understanding, high probability or high or valid area where to take a trade from. So in this video here, I'm just going to kind of like, we'll look at yesterday's price action, say for instance, off the 12 range, and basically just showing you where you need to put your stop loss at in the event the price comes back against you. Looking at, key levels or key areas of supply and demand and why I took, where I took my trades from yesterday, which the market was, if we look at, let's see, the market yesterday, yeah, it didn't do a whole lot. We kind of, after the market opened, we kind of kept making these lower highs and lower lows to the downside, and then kind of just, pushing lower, pulling back, pushing lower, pulling back, pushing lower, pulling back. And then we went sideways about 1 yesterday. We kind of just chopped around the rest of the day. Now, the rest of the day here, this is just crap to me. Like the rest of the day from, I'd say from probably 1:30 on, it was just, pure nonsense. I wasn't trading that stuff. But yeah, there wasn't too much movement to where there was big swings in the market, to where you could have actually, I'm not saying, yeah, yesterday, if you know how to trade, you can still make money. I did decent yesterday. I'm sure a lot of guys, other fellow traders here in the community probably did fairly well. But yeah, it's all about stop loss. So we'll talk about stop loss first. All right, let's go ahead and jump into this. And this is looking at yesterday's trading session. Okay, now this is me. This would be looking at where to place your stop loss at from off the entries that I took. Okay, so I'm going to explain these entries. Yesterday, after the market opened up, shortly after 9:30, the market pushed down, correct? It pulled back, pushed low, but it didn't take out this low here, right? Okay, but let's look at this, okay? Let's look what happened here. When price pushed down here, pulled back, and pushed lower, right? Okay? Turns around, pivots, pushes higher, breaks up, breaks back, breaks up, okay? It does take this, it doesn't completely take out this area here, but it breaks back in the structure here. But let's look to see what really happened. When price pushed to the upside, what did it do? It made a little high here, pull back, made a higher high here. Then it flips, okay? Turns around, moves lower, forming a swing to the downside, pulls back, pushes lower, pulls back, pushes lower. But it doesn't take this low out, right? But still, on the move to the upside, price pivots and starts to take our structure back down to the downside. It's breaking structure to the downside, and it's taking out structure. What does it do to take out structure? Okay, well, when it pivoted right here after making this high right here, it pushed down, pulled back, and pushed lower, taking out structure right here and breaking structure as it made a swing to the downside. So you ask yourself, well, where's supply at? Where's a small area where I can take a trade at on this move to the downside? After price pushed up, made a high here, and then it moved to the downside, breaking structure, making a swing to the downside, and then taking out structure. So this is taking out structure. Taking out structure, look to the left-hand side. Did it take out structure? Yes, right here. It's a little swing here. Did it break structure? Yes. Push down, pull back, push lower. All we're looking for is a retracement back to a swing level that took out structure. Swing level that took out the structure right here as it was breaking structure to the downside. Price pulls back. This will be the little area right here, this little zipper, if you want to call it, this little sideways motion right here. Price pulls back to it. As long as price stays below that green candle, the wick of that green candle right here, I'm going short. But I have to see price close red to the downside, right? And it does that, okay? So, would that be a valid entry? Yes, take that short right there. Price closes, red to the downside. Take it. Where's my stop loss going? My stop loss is going right above the back end of this red candle right here, okay? All right, so I get into the trade. Price closes at 41.32.5. This is trading off the 12 range now, guys. So if you put your stop above here, then of course you need to know that you are going to incur some loss, some ticks, some loss when it comes to the amount of ticks, whatever the case is, because you're talking about getting in right here at 32.5, and price comes back to 35.5. So that's pretty much 3 points almost right there. So And I always tell people, always ask me, well, how much stop loss do you normally give your trade? Well, if I'm trading off to that 12 range chart, somewhere typically between 10, 12 ticks right there, whatever the case is. So right here, okay? So I place my stop right at the back end of this candle here, the top end of this candle right here. Price comes above that area, I'm getting out. Yes, I took a little small loss there, whatever the case is, but this, if you follow market structure and follow price action, if you understand what was going on here, price, as it was coming to the downside, made a low, lower high, lower low. There's a swing right here, okay? Price turns back around and starts breaking into structure right here, okay? Doesn't completely take out this area of structure, but it's breaking in structure back to the upside. But the key to this is that price pushed up. As it made a low here, it starts pushing higher, imprinting a high. And as it was making this structure to the upside, it started making swings. Pushed up, pulled back, boom, made a high here. Turns around. The thing about it at this point here is that did it take out any structure back to the downside? It took out this swing here as it was breaking structure to the downside. Breaking structure means making swings. Pushing down, pulling back, pushing lower. It took out this area here. All we're doing is looking for a retracement back to this area right here, which at this point, this is to me is classified as a little small little area of supply. I'm in at the close of the red candle. My stop goes right at the back end of this red candle right here. Okay, all right. In the event that price comes back, okay, I'm stopped out right there, whatever the case is. Okay, so price moves on. Okay, all right. So let me clarify this again before we move on. Okay, stop loss for one. All right, I just showed you where to place a stop loss at in the trade entry. Two, okay, make sure it's a high probability area to where you're going to be able to capitalize on a move. Okay, having a small margin of an area to where to trade from will risk you losing money. Okay, immediately. Okay, so as a beginner trader, I would definitely say, like, if you got a small margin where you're looking to take a trade, there's a small area, okay, small area where you're taking a trade from. That's going to, so you get into a trade and you may only have a 4 or 5 tick area, 4 or 5 tick profit area above you or below you, whatever the case is. That you're just going to take a scalp real quick. Be careful about that because price only may move just 2 or 3 ticks and then come back against you. So be careful. So the key is knowing where to place stop loss. To make sure that the area, gives you enough room, okay? So you get in for short here, you take it back down to this low right here, right? All right, so that's 2. Is it a high probability area? Okay, that's going to be able to afford me to be able to capitalize and make some profit. Yes. 3, be patient. Wait for the total rejection, okay? Wait for rejection. Be patient. That's the part about being patient. Now, I know, some of you guys may say, well, I don't want to, if I get in at the close of this red candle right here at 32.5, I don't want to take a 3-point loss or whatever the case if the price comes back against me. That's fine. But again, like I'm telling you, what I'm saying is this is trading off of the 4 range chart, okay? If you're looking at the 12 range chart, if you're looking at the 4 range, you probably be able to get out, somewhat sooner, whatever the case is. But I took my trades yesterday off the 12 range chart, okay? So which is my anchor chart, okay? So anyways, yes, if you feel as if I don't want to take that and carry that type of loss or draw down on 3 points, whatever the case is, as if price pulls back, starts coming back against you, then get out earlier then, get out earlier. Hey, the thing about it is that you could get right here. And so another thing you can do too is this right here. You get in at 32.5, close to this red candle right here, right? All right. Don't take it immediately right then and there. Maybe wait for price to pull back a little bit, okay? Pull back a little bit, and then when it starts moving back down, get into the trade, okay? So maybe when price is right here at 32.5, I'm in the market once that candle closes red. Maybe wait for price, see if it's going to pull back a little bit, which it does. If you see the close right here at 32.5, it kind of pushes down and then pulls back right here. So maybe wait for the little pullback, okay? Maybe back up to 34. So closes red, wait for a little pullback, maybe 34, and then get in. So if you do that, you're probably going to capitalize on about another 1.5 going down to the downside, okay? Maybe do it that way. So think about it, because if you get in at, say, if I get in at 32.5, okay, and price comes back against me, well, I start taking, I'm not saying I'm taking a loss, but the market comes back against me, right? But if you take and wait for a little pullback, once price breaks 32.5, this red candle pulls back a little bit, say 34, and then starts moving down again, then get in the trade because the market comes back at 34, you've only got about a 1.5 loss right there, right? Okay, so that will help you minimize from going from a 3 point to maybe just a 1.5 loss, okay, off trade off the 12 range chart, okay? All right, so again, stop loss. Make sure the area is a high probability zone, a high probability area you're trading from, and be patient, wait for the total rejection. All right, let's move on. Okay, so price pushes down. So what does it do at this point? It makes a full big swing to the downside. Swing down, pull back, boom, breaking lower, right? Pivots, turns around. What does it do then? It starts breaking structure, taking, trying to take out this area structure to the left-hand side. You must always look to your left-hand side to see if price is taking out structure. Here it is. Push-ups make a high, lower high. Higher low, higher high, higher low, higher highs, right? So price does what as the move to the upside, making higher highs and higher lows, trying to do what? Take out this area of structure to the left-hand side. As price is moving up, look to your left to see if it's taking out structure over here. Now, it doesn't completely take out this area of structure to close above this high right here, okay? But it does on the way to the upside. It pushes up. Once price breaks above this candle right here, this red candle right here at 41.39.5, it's pretty much, in my mind, it's already kind of taken out or cleared this swing to the upside. Okay, trying to take out this area of structure. It's already broke into this area of structure, this swing here, as it's chopping to the upside, okay? So, it pushes up, pulls back, making higher highs and higher lows. It pivots, right? It pivots, okay? And starts pushing, turning back around, right? But as it swings to the upside, what is it doing? Within this swing to the downside here, there are other swings. There are more swings within this big swing. Swing down, lower high, lower low, lower high, lower low. So as price is pushing to the upside, it's taking out small swings within the larger swing. Okay, here, higher high, high, higher low, higher high, higher low, higher high. Okay, so these little swings right here took out some structure within this bigger swing. Okay, so each area here it marks an entry area for me. This area right here, this little swing right here, was a supporting swing for me to where price took out this, started breaking into this swing level here within this bigger swing. Price pushed up, pulled back, pushed higher, okay, which would be, we'll say right here, pushed up, pulled back, broke higher, pulled back, pushed higher, okay. When it came back to this swing area right here, this little swing is a supporting swing within this swing here. When it came back to this area right here, this swing area right here was breaking into and started taking out this swing area right here, okay? Within this bigger swing, okay? Pushes up, pulls back, breaks higher, higher low, higher high, pull back, boom, it taps into the area right here, okay? All right? The moment it taps into the moment it comes back and taps into this area here, okay? Taps into this area. Boom. Green candle right there. Closing that green candle. I am going long all the way back up to the tops right here. My stop where? Right below the green candle right here. Right below this green candle, okay? Now, that's me getting on the trade. I'm going to get in right here at 29.25. Now, what you could do, like I just told you before, wait to see a price if once it closes at 29.75. Sorry, 29.75. Wait to see if it's going to pull back a little bit, then turn and start going back. Meaning you can't see it right here, but price what it may have done is close right here at 29.75. Right. All right. Then the next candle could have been red coming down, and then the candle flipped to the upside. So basically, as price closed at 29.75. Wait to see if it's going to pull back a little bit before that candle flips green to the upside. So on the pullback, maybe you could have got in at 29.5, 29.75. Then your stop loss would have only been a point away. You see what I'm saying? So maybe wait once the candle closes to pull back, and the next candle is forming after that green candle closed there. Wait for it to pull back a little bit and then go up. So that'll help minimize if in the event that the price comes back below that, it closes back below this green candle right here, stops you out, maybe you're only taking a point loss then, maybe a point and a quarter, whatever the case is, versus maybe taking, if you get in at 29.75 and then price stops you out at 26.75, that's 3 points. See what I'm saying? So maybe you want to take a point and a quarter, a point and a half loss. If you wait for the break of the green candle, pull back a little bit, then take it long. Okay? So you can do that. I'm not saying it's gonna work out in all times, because sometimes price at the close of this green candle right here will just start taking off. So you can play that strategy there. Wait for the break of the green candle. Wait for price, once that green candle closes, wait to see if it pulls back slightly before it pushes back going north or going up. Then you go long, okay? Back to the upside, okay? Stop loss right below the green candle right here, okay? Be patient. Wait for the total rejection. 3 parts to this, guys. Like I said, stop loss placement. Check to see if it's a high probability area that's going to provide you with enough room for enough profit target for as far as setting a TP where you're making enough profit. 3, knowing exactly where to be impatient and wait for the rejection. So there's 3 parts there: stop loss, high probability, and be impatient, waiting for the complete rejection. Okay. All right. After that, right above us, we have a setup here. Okay. How and why? Well, as price was making these higher highs and higher lows right to the upside, it formed a leg to the upside, right? So we have swings to the upside. What happens here? Price flips, okay, and starts taking out structure, swings to the downside. So it's taking out structure as it's turning back around, right? So gets up here, makes a high, red candle pushes down, forms a little swing at the top here. Down, up, boom, starts breaking lower, taking out this area here, taking out this area structure here. So at this point, as price is trailing to the downside, I'm looking to my left to see if it is breaking structure on the way down and taking out structure. It does. Then once price starts, I notice that price is breaking structure. I look to see when price starts pulling back here, is there a supporting swing in the area, swing where price took out some structure here? Yes, right here. Okay, so when price gets back to this area right here, okay, because there's not another swing within this leg to the downside, so the only little swing was right here. Price pulls back to it. When it gets right back to this area here, all right, took out this swing here, breaking structure to the downside. Price pulls back. What does it do? I need to see price stay below, I think 37 and a what is it, 37 and a half. So I was a little aggressive on this entry here. I went in on the close of this red candle right here. It was like 1 or 2 ticks away from clearing the bottom end of this green candle right here, right? All right, so I went in short right here. Now, where do I place my stop loss? Right above the back end of this red candle at 40.75 right there. Now, again, what I said you could do, close of the red candle, see if price pulls back slightly, maybe 39, and then go short. That way, if you get in at 39, going short, you only have point and a half of loss if it comes back against you. Okay, all right. So you gotta provide yourself some room for stop loss. What I'm trying to say. Having a 4 or 5 tick stop loss in that instance, like, okay, think about it. Price closes red here. You wait for price to pull back 3 or 4 ticks here, and you get in at 39, 39 and a half, whatever the case is. You're looking at maybe a point and a quarter stop. Okay, that is very minimal, guys. Okay, very minimal. So you be solid. Okay, but this is a solid area to take a trade from. Why? Also is because below me to the downside, I don't have anything that's going to stop me until we get back down to this low right here. Okay, all right. Get in right here, close the red candle, boom, take it back down to the low here, and price actually shoots lower. All right. So 1 setup right here. 2 setup, going long. 3 setup, going short. All right, I didn't show you 3 instances where to place your stop loss. The moment you get in, if you trade up the 12 range chart, whether you're going short here, red candle close, put your stop loss above, on the back end of this red candle. Okay, once that candle closes right there, wait maybe for a little pullback and then go short. Okay, that's going to minimize how much loss you're going to incur just in case price, if you got in right here to close and then price starts pulling back, okay? Because a lot of you guys may not have the size capital or the capital to be able to incur much loss when it comes to stop loss, right? So I would recommend this, though, to be honest with you. If you don't have much that you're trading with, in your account, whatever the case is, don't try to size it up and start trading the ES, okay? Because the ES is $12.50 a tick, and that is heavy. Even trading one contract, if it comes back against you, just 4 ticks, that's $50 loss right there. 2 points, that's $100. 3 points right here, that one little candle right there is $150. So you take that with two contracts, that's $300 you lost on that trade right there if it came back against you. The way I say minimize that is to wait for price once it closes there, the red bottom end of that, closes at that red candle. Wait for it to pull back a little bit before going short here. Same thing here. Closes, you're going long. Okay, right here, wait for it to pull back a little bit before going long. Okay, so if you don't have much in your account to trade with, I would recommend maybe starting with the micro, the MES, the micro E-mini S&P 500. Okay, it may be a better way to start building a size or building up an account. Okay, so but that's pretty much all I wanted to show today, guys. Was like, because I get this question all the time: where do I put my stop loss? Can you give me a good way to manage or strategy to use to manage my loss? You may be trading 80% and then you get into a bad trade and it takes everything from you. It takes those 3 or 4 trades you took that were positive, and then you not made nothing for today. So maybe wait. When it comes to when it comes to your stop loss, like I said, right here, the price closes red as candle here. Maybe wait for a little pullback and then go short to minimize how much loss you may take in the event that price comes back against you. Again, same thing here. Going for a long, price closes green. I'm long here, but maybe wait for you guys. Maybe wait, especially if you're a beginner. Maybe wait if price pulls back a little bit here, then go long. Okay, that's going to help reduce the size of loss you're going to incur in the event that price does come back against you at the end, bottom end of this candle right here, or the top end of this candle right here. It's going to minimize that, guys. Okay, but that's all I have for you today. Again. Stop loss placement. 2, make sure you're in a high probability area. 3, be patient and wait for the complete rejection. Okay, I hope it makes sense for you guys. I'll see you guys on Monday when we'll be trading again. And that's going to be it, guys. Take care and have a great weekend.